Did you know that owning only 5 Tesla stocks is worth way more than you think? Investment enthusiasts are always in the know of which stocks would make the most profit. While not everyone thinks that just 5 shares of Tesla are enough to make them rich, this video will prove otherwise. Make sure to stay tuned and keep watching to find out more about this. Even with endless controversies, or perhaps because of it, Tesla makes the most noise in the financial industry these days. Thus, investors are scrambling to either buy or sell their stocks. While others believe that the leading EV company has a spectacular future ahead of it, others doubt its potential. In today's video, you will see why owning 5 Tesla stocks is worth way more than you think. Dubbed as the leading electric vehicle maker, Tesla has been working hard to make it a name known across the globe. According to Gary Black, an analyst from the Future Fund, the electric vehicle industry will reach a market penetration of 60% by 2030, and anticipated that Tesla will achieve 21% of the auto market share. Black believes that Tesla will quadruple its current value to reach as high as $4 trillion by 2030. According to this estimate, with global light vehicle sales at 85 million units, Tesla would be delivering about 10 million vehicles a year by the end of the decade. He even predicts that Tesla's current fleet's existing sales will make the company $140 billion, increasing Tesla shares to $100. People who invested in Tesla 10 years ago are probably feeling pretty good about their investment today and might just be smiling in their sleep. According to calculations, a $1,000 investment made in March 2012 would be worth $148,755.85, or a gain of 14,775.59% as of March 25, 2012. And this return excludes dividends but includes price increases. The S&P 500 rose 223.54%, and the price of gold increased 13.37% over the same time frame in comparison. Looking ahead, analysts are expecting more upside for Tesla. Those who invested in 2010 when the initial public offering's price per share was just $17, their investment would have paid off by now. Nearly a decade later, a $1,000 investment in Tesla made in 2010 would be worth more than $36,000 as of February 4, 2020, according to CNBC calculations. By comparison, a $1,000 investment in the S&P 500 would have earned a total return of just over 281% over the same period. It is no secret that Tesla stock experienced a dip in recent months. Because of this, some are scrambling to share their shares. However, stock prices are starting to flatten out. This is good news for those who chose to hold on to their stocks firmly, believing in the company's potential. They believe that Tesla's stock price could grow over and beyond expectations. It can even be sooner rather than later, they believe. Still, there can't always be only optimistic people. Some big names in the financial industry lowered their forecasted Tesla stock price. However, Tesla's financial numbers proved otherwise. A significant year-on-year return has almost become a thing of normalcy for Tesla shareholders. For example, if you purchased 10 Tesla stocks at their peak price in June 2021, you'd have paid $6,940 in June 2022. Your 10 stocks will be worth approximately $7,500, which equates to about $540 in just a single year. Interested yet? Some may think that they would like to buy a share for themselves, but even with the dip, it might be too much for them. Some may ask themselves, what's the smallest number of shares I can buy? A lot of people might say that the smallest number of shares an investor can purchase is 1, but the real answer is not quite as straightforward. Today, it is increasingly common for investors to purchase fractional shares, where as little as $1 can be applied to a stock buy order. While there is no minimum order limit on the purchase of a publicly traded company's stock, many brokers in the past advised buying blocks of stock with a minimum value of $500 to $1,000. This quantity size is due to the fact that no matter what online or offline service an investor uses to purchase stock, there are brokerage fees and commissions on the trade. In most cases, one share would cost the same amount as $500 of the shares. But again, with many online brokers moving to commission-free trading, these considerations may no longer be as applicable. That said, investors may consider buying fractional shares through a dividend reinvestment plan, or DRIP, which doesn't have commissions. Why should you invest your hard-earned money in Tesla stock? Although numerous uncertainties surround Tesla these days, a lot of the worrying around Tesla stock is hearsay until proven differently. Despite headline-worthy innuendos, Tesla's Shanghai Gigafactory is back at production levels of 1,000 EVs last seen before April's shutdown. Moreover, executives believe building 2,600 vehicles a day is achievable, which sets Tesla up to produce its targeted 1.5 million EVs. With Tesla's forecasted vehicle delivery growth of 50%, along with huge profit margins, shares trade for less than 50 times this year's earnings, and that makes Tesla stock a solid choice for investors to buy growth at a compelling valuation. Right now, investors also won't get an argument from an underloved Tesla price chart that looks like it's on sale. Are you a Tesla stockholder? If not yet, will you be interested to be one? Let us know in the comments section below. Why should you own shares? Before buying shares in a company, it is imperative to ask yourself why you're making that decision. Does the company have great future prospects with a share price that could go from strength to strength? Or is there takeover talk in the offing that could potentially drive up a company's share price? Maybe the company you've identified is on a recovery mission and its share price is starting to recover from previous lows. Even large corporations and experienced investors take time to do an exhaustive study before investing anywhere, even in known brands. As the stock market is quite unpredictable, it is never advised not to study the market first before making a sound decision. Once you have decided to buy stocks, after a thorough study of course, you may want to know how to buy shares. There are several steps to take once you've satisfied yourself with the reasons for buying shares in a particular company. First, open an account. Whether you're a seasoned share trader or someone who is brand new to stock market-based investments, if you want to buy shares in Tesla, you'll need to open an account with a regulated broker. Stock brokering is a competitive marketplace nowadays, and services for DIY investors come in a range of different guises, from online investing platforms run by some of the biggest names in financial services to nimbler investment trading apps that work off your smartphone or tablet. Before opening an account, bear in mind the following. Keep your ultimate financial goals in mind. Be prepared to ride out stock market ups and downs. Aim to keep trading costs to a minimum. And remember that share investing can prompt tax charges, for example, when selling part of your portfolio. Second, you need to consider where Tesla is traded. The ticker symbol for Tesla is TSLA, and the company is traded on the NASDAQ market in the US. NASDAQ's trading hours are 2:30 p.m. to 9 p.m. UK time, Monday to Friday. Third, do your research. As mentioned, this is a very important step. To find out more about Tesla, go online and visit the company's investor relations page. Fourth, plan your investing strategy. People tend to invest in one of two ways, either with a lump sum purchase or via smaller, steadier amounts over time. The latter method is often referred to as a means of pound cost averaging, a stock market hack that may help you pay less per share on average over time. Rather than wanting to build up a lump sum, it means an investor's money is being put to use in the market straight away. Next, place an order. Once you're ready to buy shares in Tesla, log into your investment account or trading app. Type in the ticker symbol TSLA and the number of shares you want to buy, or the amount of money you're prepared to invest. Finally, review Tesla's performance. Whether your share portfolio is crammed full of companies or holds only a handful of stocks, you must review how each component is performing on a regular basis, monthly, quarterly, or annually. Doing this allows you to review performance and ask if any adjustments to your holdings are required. To maintain the status quo, buy more stock or sell existing shares. Of course, it is imperative to monitor Tesla's stock performance in the market. You would have to have believed in the company's potential before investing in it. Still, as earlier mentioned, the stock market is quite unpredictable. Remember that investing is a risk in and of itself. Watch our other videos for more Tesla stock content.